Welcome, welcome. Welcome back to From Middle Class to Millions. I'm going to tell you something. My company that I worked for 20 years was using me. And I was using them right back. That's how I walked out of 20 years in pharma as a multimillionaire. And it's not because I made millions. It's because I thought like a millionaire. So let me tell you a little bit about what I'm talking about, because I see a lot of you W-2 earners, a lot of you 9-to-5ers playing defense. You're protecting your job, you're chasing the promotion, you're chasing the raise, you're chasing the merit increase. You're doing every single thing you can to scrape up a little bit more money to eke by. You need to start playing offense, okay? And that's what we're going to be talking about in today's episode. No more of this defensive action. It's not the only part of the story. All right, let's talk about it. Your total compensation package is a wealth tool. And I want you to start thinking about it like that, because people are only looking at their salary. And there's so much more to making money, to building wealth, than simply looking at your job. The difference between the people who retire wealthy from corporate jobs and the people who don't isn't solely based around their salary. It's what they did with everything that the company provided them. Every single thing that the company offered. And I think that's what's so incredibly important to understand. That yes, when we look at signing on that offer letter and you get that compensation package, I want you to know it's an entire package. It's not just the salary that you're going to be paid. That's an important element of it, of course, but there's so much more. And I want you to understand that if this exchange between you and your employer isn't working for both of you, I don't want you to be a part of it. Because believe you me, if it's not working for them, they're going to let you go. So if it's not working for you in its entirety, you've got to let them go. You can't let the job suck you dry and leave you with nothing at the end of, your working years at 65 or 67 or whatever time it is. I want you to think that the clock is ticking. Whether you feel like it or not, whether you're in your 20s, your 30s, even if you're in your early 60s, the guaranteed paycheck is not necessarily guaranteed, and there is an expiration date on it. So the time for you to start building is right now. If you are bringing in a salary, there's more to it than that, especially if you're in corporate. I want you to know that when the time comes for you to walk out the door, whether it's when you decide it's time for you to walk out the door or they decide for you that it's time for you to walk out the door, I want you to think about what it would feel like if you were fiscally ready, financially prepared, able to walk out the door with the only question in your mind being, what can I do now? What am I going to do to occupy my time now that I don't have 40 hours plus that I'm contributing to this place? And I want the answer for you to be whatever the hell it is I want to do. Okay? That's what I want the answer to be. So let's talk about a lot of these benefits that people leave behind. Okay, because I've been working with a lot of folks who are 9-to-5ers, who are W-2 earners, who aren't entrepreneurs. I work with entrepreneurs, yes, but I also work with people who worked a 9-to-5 like me. And the reason why I think a lot of people are intrigued by how I managed to amass millions with a 9-to-5. It is not the norm. It's not what we hear about all the time. We only hear about these people who grew these amazing businesses or had a great exit and sold their business and all of these things. We never hear about the folks who work a 9-to-5, work for a company, work for a corporation, work for an organization, and they too become multimillionaires. And that's why I want to share my story, because you don't have to have the next biggest, greatest business idea in order for you to build wealth. But what you do need to do is look at every single benefit that is offered to you through that organization or corporation and decide, how can I use this to keep more money in my pocket? Okay, and ensure that they are actually making this relationship beneficial to both of us. Okay, to both of us, not just them, but also you. All right, so the number one thing that pops up, which is like the big dog, is the 401k match. I know you've heard me talk about this before, but honestly, I don't like to necessarily call this free money, because it's part of your benefit package. You're not going to get it if you don't show up for work, right? So there is an exchange here. But what I want you to understand is your employer is encouraging you, incentivizing you to contribute to your retirement savings. Now, of course, believe me, they are getting something in return. They don't have to pay you a pension anymore. So the onus is no longer on them. Who the heck wants these pesky employees that stop working at 67 years old and then have the audacity to live for another 20 years and they're footing the bill? They don't want that. So of course they decided, let me put the onus on you. Let me put it on you to make your own money and your own retirement savings. But what we will do is, in order to encourage that, we're going to put in a match. You put in a little bit of money, we're going to put in a little bit of money. Now, I want to be honest with you. When I was contributing to my 401k, I did not max it out. I have clients who max out their 401ks. I have clients who've never started a 401k, who don't have a 401k and want to start it, who want to start contributing or want to start contributing more. I never maxed out my 401k. However, if you can, by all means do it. And even if you can't, at least get that match, because that is money that when you leave, when you're vested, when you are allowed to get the maximum that they've put in for you, you can leave the job and take your money with you. Okay? And that amount of money over time can amass to hundreds of thousands of dollars. All right? So please, whatever you do, at a minimum, contribute enough to capture every dollar of the match. Okay? Because that's an instant return on your contribution. Immediately, you could be making 50% or 100% on the amount of money that you're putting in. It's a no-brainer. The second benefit that I notice a lot of people either don't understand, don't know about, don't understand how this could benefit them really, is the health savings account. Now, of course, in order to have a health savings account, you have to have a high deductible health plan. And I see this new wave of folks saying that you can pay for this using your HSA. If you have an HSA, use it to pay for these things. That is the absolute wrong advice to give anybody. That's somebody who wants you to use your HSA to pay for their product or service. But in actuality, you shouldn't be touching your HSA dollars. Okay? Most people are treating the HSAs like a checking account, using it for copays, using it to pay for some of their medical expenses. I want you to use your HSA and treat it like a brokerage account. I want you to put the money in there, invest it, make the dividends and interest and all the capital gains reinvest, and keep that sucker growing. I don't want you to use your HSA money. And I'm going to tell you why. Once you have an HSA, you have a triple tax advantage. This is something that's completely different. And I always say I'm going to do a whole episode on HSAs because I believe that this is really confusing for folks and they miss out on the understanding of how beneficial this health savings account is. The triple tax advantage means that the contributions, the money that you put in, are pre-taxed. Okay? Pre-tax money. That means that lowers your taxable income. It signals to the IRS that you didn't make quite as much as you did. And so you don't have to pay income taxes on your entire salary. The growth in the HSA, so any money that is made off of those investments, is also tax-free. Okay? So tax-free in, tax-free growth. And the withdrawals for all of the qualified medical expenses are also tax-free. That's why there's a triple tax advantage. I contributed into my HSA, I invested in it, and I didn't touch it. Anything that I could pay out of pocket, I did. Anything that included any medical expenses, I paid out of pocket. All those copays, I didn't pull out money out of my HSA. No, I left the money in there. It's still in there. All right. And I let it grow because I've invested that money just like I invested in my 401k. I'm allowing it to compound, and that's what I want you to do as well. Because the future, you will most likely have medical expenses that are far greater than the ones that you have now. And right now you're working, so you can pay for those right now out of your salary. But the future you, when you stop working, when usually your medical expenses as you get older increase, you want to use that money. You want to have money there that you can use that's tax-free invested dollars that you can pull out to pay for qualified medical expenses. Now, bear in mind, if you pull this money out before 65, right, for expenses that aren't qualified medical expenses, well, yeah, that's going to be problematic. You're going to be penalized. You're going to have to pay taxes on it. But if you pull them out for medical expenses after the age of 65, again, all tax-free. You can just withdraw that money and use it for your medical expenses. And if you don't have medical expenses after the age of 65, and you don't need to use your HSA for that, then it'll be taxed like a traditional IRA, right? So you don't have to concern yourself with, what's going to become of this money? It'll just be used like a traditional IRA and taxed that way. So by all means, if you have an option to have a high deductible savings plan, a high deductible health plan, then you can get a health savings account. So get that HSA, put the money in there, invest the money that's in there, and don't touch it. Another thing that is a truly American phenomenon is not taking full advantage of your paid time off. I don't know who you people are. I live to take paid time off, okay? If there is time off to be had, I'm taking it. And I want you to as well. Listen, if you drop dead, they're not giving you back your PTO. So what are you doing exactly? Like, what is the thought process here? This is part of your compensation. Not using it is, again, leaving money on the table. If you are not using your PTO, then you are not concerned about your health. And it is another part of your wealth tool. This is a part of the instruments that you can use, the vehicles that you can employ that will help you build wealth. It'll help you increase your health, and it'll help you with your relationships. Your whole ability to think freely and clearly comes from rest and relaxation. Use your PTO, all of it, all of it. Another element in the benefits package that I think people hear about, know about, HR may mention it to you, or when you start, you know that it's in its existence because they point you to the section in their HR package in the orientation, and that's the Employee Assistance Program, okay? A lot of you know that it exists, but you don't know what's inside of it. And I think that what's often included in there are services that you could potentially use that you're probably going to pay for outside of this program. Your employer gives you either discounted rates, sometimes they're free, sometimes it's a package of services that you can get. These are services that you may not need routinely or regularly, but you will need them at some point in time, possibly. And why not use the services that are given to you that are probably more economical than the services you get out in the open market? There's often legal counseling, mental health counseling services, even financial services that are available to you. I think that even these coaching services that are available out there as well, they're already paid for. They're a part of your package. It's a part of the deal when you show up to work that you're going to get something out of this, and this is part of it. It is not, again, simply just your salary. Another benefit that I noticed that this really comes in handy a lot for the folks who oftentimes live in cities, but it's not only for city commuters. It's the transportation and commuter benefits. These are, again, pre-tax dollars for transit, sometimes for parking, sometimes even for rideshare. And I notice that a lot of people don't even submit these on a monthly basis. And I'm like, hello, you don't like money? You don't want to keep more money? These are the same folks who will tell me that they can't increase their contributions for their 401k or their IRA or don't have money to save for their kids' college. Meanwhile, they're not submitting their expenses for these types of things. This is what I'm talking about. These are the expenses that you're doling out that you actually may not need to. It's keeping more money in your pocket, more of that salary that you're so focused on that you could redirect to other things that will enable you to build wealth. And yeah, sometimes it's a small amount that you're submitting on a monthly basis and it feels like it's more problems than it's worth. But you folks that are, commuting into the city for 20 straight years, that adds up. It really adds up. And I really want you to get into the habit of capturing these dollars that are available to you. I'm not talking about optimizing until you're crazy, but some of these are so simply in front of you that you utilize every single day and you're missing out. And I want you to think about when you're considering investing and what it'll take for you to become financially independent and how many years it'll take for you to hit that number. I want you to think about, well, sometimes it requires an extra $50, $100, $300 a month. But if you're just letting this amount of money slip through the cracks, and instead you could redirect those funds to your investments, that's buying back time. That's allowing you to do more things, have more comfort, spend more time with the people you love and enjoy, and less time worrying about if you're going to be okay financially. All right, let's also talk about fitness, wellness, and nutrition discounts. I know many companies subsidize gym memberships, nutrition programs, and wellness programs and wellness apps. I know that, I don't even have to question it. So many companies do this, right? So if you're paying out of pocket for things that your company would cover or discount, why are you doing that? Again, you're overpaying. Yeah, you may be going to a fancy gym that's $400 a month. Yes, they do exist, and even more than that. But if your employer's like, hey, we're going to cover $100 a month and that's it, take it. And then take that $100, right, that you would have been paying to the gym and funnel that into one of your investments. Put that into your vacation fund. Put that into something, your high yield savings account to boost up your emergency fund. It's really about taking the money that's available to you and redirecting these funds towards the things that matter to you, the things that are important to you. The last thing that I noticed, and I remember getting this myself, that a lot of folks have access to is a credit union through their job. If your job offers you a discounted rate for a credit union or a free membership or whatever the case may be, I would say jump on it. It doesn't mean that you have to do away with your other banks, even though I think that if you are paying a service fee for a big bank, a brick and mortar bank, you're just, again, money that is wasted that you could redirect to somewhere else. I like the credit unions because they often give you better loan rates, right? Whether it's car loans, mortgage rates, HELOCs, whatever the case may be, the rates are often better through a credit union. And honestly, you never know when you'll need it. You never know when you'll need these loans. And if you can get a better rate, whether it's a percentage, even half a percentage, that makes a huge difference. Again, keeping more money in your pocket. So if there's a credit union accessible to you through your employer, I want you to use it. I really, really do. I want you to consider it. I want you to know that I'm not just here telling you to squeeze out every damn benefit you can from your employer. I think that you should. I would love it if you came back to me and you said, yeah, this is what I got, this is what I got, this is what I'm using, I was paying this, and now I'm getting the money through my employer. I would love that. And I'm not telling you this so that you can be miserly. I'm telling you this so that you have an understanding of your dollars and that you're keeping an eye on your dollars so that you can use them to buy assets. Because assets build wealth, whether it's in the market, whether it's in real estate, whether it's in vending machines, naming the things that I do, whether it's in private equity, I don't care. I honestly don't care. But I know that I want you to keep your eye on these dollars so that you can redirect them to the places that are going to lead you in the direction that you want to go. Your job is just your starting point. It is not your ceiling, and it is definitely not going to hold you hostage. They can let you go at any time. We know that. You can let them go at any time. We also must know that. And we also have to know that when you're showing up for that 9 to 5, 5 days a week, I want you to understand that you can take everything that they have to offer and use it to your advantage, because they are going to take everything that you have to offer and use it to their advantage. Listen, not everyone's going to be an entrepreneur, okay? I wasn't. I built my wealth off of the backs of that pharma company. Hell yeah. Every single time I got paid, I was like, yeah, thanks. But I also showed up and I produced. And so I'm going to take this payment and I'm going to use it to the best of my ability. It didn't start off with me buying assets. It started off with me buying a lot of nonsense. It started off with me trying to pay down debt. It started off with me doing a lot of other things. But if you have what seems like a consistent flow of money, consistent income, a paycheck that seems certain right now, it seems guaranteed right now, then you've got to use that guarantee and certainty as a launch pad for as long as you can. And you don't know how long that will be. So we want to really optimize on what they are giving you and not only what you're giving them. I don't want you to be trapped by your job. I want you to be prepared. I want you to be ready to when you walk out that door, or they tell you, you need to walk out the door, that you are fiscally and financially in a position to do so. And you might not be there. I mean, God forbid you could get laid off tomorrow and you're just starting your journey, but you're already preparing, right? If you're working with me, you are fully prepared. You are getting prepared. If you just started, you know that this is a possibility. So you are setting yourself up so that you're going to be prepared for the worst, but you also know that you are ready for the best. I want you to understand that when you walk out, I want you to walk out on your terms. It's not always going to be that way, but even if it isn't, I want you to walk out knowing that you were intentional during your tenure there, okay? You were a good steward of your money. You are going to be ready for whatever happens in the next chapter of your life. You don't have to make millions to become a millionaire. I think that might be a big misnomer for a lot of people and really surprising. You don't. You just have to be strategic with what you already have. That's it. So I want you to do a couple of things this week for me that I would think would be helpful for you if you're interested in really getting as much as you possibly can out of your employer, because I can assure you that they're getting as much as they can out of you. So I want you to pull up your benefits portal and I want you to look at what you actually have access to. What's available to you? What can you use? What makes sense to you? Are there some of the things that I mentioned here that you're probably already paying for and your actual HR benefits can give you those same things, allowing you to keep some more money in your pocket? That's the first thing. The second thing, please make sure you're getting the full match in your 401k. Come on. This is the bare minimum. If you don't know what that means, if you don't know how to do that, then you've got to book a call with me. Because yes, I'm not telling you just get the 401k match and that's it, but I want that to be your floor. All right? So let's do that. The third thing, see if your health plan qualifies for an HSA. If it doesn't, don't panic, because we know open enrollment is coming in the next 3-4 months, October, November, around there. Some people start even sooner. You will have an opportunity to see if a high deductible health plan makes sense to you. And if it does, if you should get an HSA with it, and how you can begin investing in that as well. See, again, this is something that I want you to look into. I want you to start planning for that, even though it's a few months down the road. Okay? If you don't know how to access your portal, if you're not sure where to get this information, call Human Resources. That's what they're there for. You have questions, ask them. Make sure that you ask them all of these questions. And once you get this comprehensive knowledge from them and this information, and if you need help in designing a real financial plan, because I've given you all these elements, 401k, HSA, all the stuff in your benefits portal, how do you start investing in all of these different things? That's when you say, I need to book a call with Shannon. I need to get on a call with Shannon and talk to her about what the strategy is. Because I don't just want you doing stuff willy-nilly. I want you to actually have a goal, and I want to ensure that you are going to reach it. All right. I always ask you guys to rate this podcast. I always ask you to share it with anybody you know who works with money. And I always ask you to come back and listen next week. I'm glad you're here. I can't wait to speak to you again. If you have any questions about this at all, make sure you reach out to me. Take care.